Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive stock analysis of Palantir Technologies, ticker symbol PLTR. If you're interested in AI, big data, and government contracts, or just looking for the next big growth stock, you're in the right place. We'll cover everything from financials to valuation, recent performance, and even intrinsic value calculations. So grab a coffee, hit that like button if you're excited, and let's get started. All right. Let's set the stage. Palantir Technologies is one of the most polarizing stocks in the market right now. Some see it as the future of AI and data analytics, while others question its sky-high valuation and insider selling. As a financial analyst, I'm here to break it all down with hard data and long-term insights. We're not just skimming the surface. This is a deep dive into whether Palantir is a buy, hold, or sell for your portfolio. Stick around until the end for my final thoughts and a sneak peek at the intrinsic value I've calculated. Let's jump into the company profile. So, who is Palantir Technologies? Founded in 2003 and headquartered in Denver, Colorado, Palantir builds software platforms that help organizations, think intelligence agencies, government bodies, and large enterprises, make sense of massive, complex data sets. Their core products like Gotham and Foundry are used for everything from counterterrorism to optimizing business operations. Under the leadership of CEO Alexander Karp, Palantir has positioned itself at the intersection of AI and big data, with a mission to empower human decision-making with cutting-edge tech. What makes Palantir unique is its heavy focus on government contracts, especially in the U.S., alongside a growing commercial segment. With about 4,000 employees and a market cap of over $337 billion as of the latest data, this isn't a small player. But as we'll see, their financials and valuation raise some big questions. Let's move into the numbers, starting with revenue. Let's talk revenue. Palantir's top-line growth is one of the biggest reasons investors are hyped. For the full year 2025, they reported a staggering $4.48 billion in revenue, up significantly from $2.87 billion in 2024 and $2.23 billion in 2023. That's a compound annual growth rate that many tech companies can only dream of. Breaking it down by segment for 2024, the latest detailed data we have, their government operating segment brought in $1.57 billion, about 55% of total revenue, while the commercial segment contributed $1.3 billion, or 45%. This shows a balanced but still government-heavy revenue stream, which we'll discuss more in the SWOT analysis. Geographically, the U.S. dominates with $1.9 billion of 2024 revenue, or roughly 66%, followed by the UK at $305 million and the rest of the world at $661 million. This heavy reliance on U.S. government contracts is both a strength and a potential risk. More on that later. For now, the key takeaway is that Palantir is growing fast, especially as AI demand surges. But can they sustain this momentum? Let's look at their earnings to find out. Now on to earnings. Palantir's profitability journey has been a roller coaster, but they've finally turned the corner. In 2025, they posted a net income of $1.63 billion, a massive leap from $462 million in 2024 and $210 million in 2023. Earnings per share for 2025 came in at 69 cents, up from 21 cents in 2024. That's impressive, especially considering they were posting losses as recently as 2022, with a net loss of $374 million. Recent news also highlights their Q4 2025 performance, with revenue soaring 70% year-over-year and U.S. government revenue up 66%, as reported by Fool.com. This kind of growth is why some analysts are calling Palantir a top play for government AI spending in 2026. However, customer count growth slowed in Q4, which is a red flag we can't ignore. Let's see what management had to say on the earnings call. Unfortunately, I don't have the specific Q1 2025 earnings call transcript summary available in the data provided. However, based on recent news, we know CEO Alex Karp has been vocal about positioning Palantir as a grounded player in the AI space, taking shots at what he calls circular AI investments in a Benzinga article. This suggests management is focused on sustainable growth rather than hype-driven valuations. Additionally, the narrative around their Q4 earnings beat, as covered by ETF trends, shows confidence in their ability to capitalize on AI trends. I'll keep an eye out for more detailed commentary in future updates, but for now, let's move to the broader financial picture. Let's dig into the financial statements for a clearer view of Palantir's health. Starting with the income statement, their gross profit margin for 2025 was a robust 82%, with gross profit at $3.69 billion on $4.48 billion in revenue. Operating income hit $1.41 billion, and EBITDA was $1.44 billion, both showing strong operational efficiency compared to prior years. For context, in 2022, operating income was negative $161 million. This turnaround is a big deal. Looking at the balance sheet for 2025, Palantir had $1.42 billion in cash and equivalents, down from $2.1 billion in 2024, but total assets grew to $8.9 billion from $6.34 billion. Total liabilities are low at $1.41 billion, giving a debt-to-equity ratio of just 0.0357, a very clean balance sheet. Stockholders' equity also rose to $7.39 billion, reflecting retained earnings improvements despite historical losses. Finally, the cash flow statement shows operating cash flow of $2.113 billion in 2025, up from $1.5 billion in 2024, with free cash flow at $2.1 billion. That's a free cash flow yield of 0.536%, which isn't huge relative to the market cap, but it's a sign of real cash generation. Capital expenditures remain minimal at $33.9 million, so they're not burning cash on heavy infrastructure. Overall, these financials scream growth and improving profitability, but at what price? Let's tackle valuation next. Valuation is where things get spicy with Palantir. At a current stock price of $147.76, the market cap sits at $337.5 billion. The trailing PE ratio for 2025 is a jaw-dropping 316.34, and the price-to-sales ratio is 85.95. For comparison, the industry average PE in the software infrastructure space is around 59.77, so Palantir is trading at a massive premium. Looking at forward PE ratios, for 2026, the average forward PE is 112.53, dropping to 77.96 by 2027 and 54.51 by 2028. This suggests the market expects earnings growth to eventually justify the price, but that's a long wait for value investors. Enterprise value is $333.5 billion, slightly below market cap due to their cash position, but still astronomical. Metrics like ROE at 19.1% and ROI at 12% are decent, but not enough to scream undervalued. My take? Palantir's valuation assumes near-perfect execution in a competitive AI market. Let's break down the risks and opportunities in the SWOT analysis. All right, let's do a SWOT analysis to map out Palantir's strengths, weaknesses, opportunities, and threats. Strengths. First, their revenue growth is undeniable, 70% year-over-year in Q4 2025 as per Fool.com, driven by government and commercial demand for AI solutions. Their platforms, Gotham and Foundry, have a strong foothold in high-barrier markets like defense and intelligence. Plus, a clean balance sheet with minimal debt gives them flexibility. Weaknesses. Valuation is a glaring issue. Trading at over 300 times earnings is hard to stomach, especially with insider selling raising eyebrows, as noted by Benzinga. Customer count growth slowed in Q4 per Fool.com, which could signal saturation or competition in key markets. Opportunities. Government AI spending is set to explode in 2026, and Palantir is well-positioned with U.S. government revenue up 66% in Q4. Expanding commercial adoption of AI tools could diversify their revenue, reducing reliance on government contracts. Partnerships or acquisitions could also accelerate growth. Threats. Heavy reliance on U.S. staff, government contracts, 66% of revenue, poses a risk if budgets tighten or geopolitical tensions shift priorities. Competition in AI and data analytics is fierce, with giants like Microsoft also in the game, as highlighted by Benzinga. Lastly, the SaaS-apocalypse fear, AI disrupting traditional software models, could pressure margins if not navigated carefully. This SWOT paints a picture of a high-growth company with real risks. Let's see how the stock has performed recently. Looking at Palantir's stock performance, it's been a wild ride. Over the past week, the stock is down 7%, and over the past month, it's dropped 16.87%. The 3-month performance shows a decline of 26.84%, and 6 months isn't much better at -13.15%. However, zoom out to 1 year and it's up 34.39%, with a 5-year gain of an incredible 335.38%. Compare that to the software infrastructure industry's 5-year performance of -15.04%, and Palantir has crushed its peers long-term. But short-term volatility is real, with news of insider selling and AI market jitters causing an 11% plunge recently, per Benzinga. The chart shows a stock that's retreated to July lows, giving back gains from the Q4 earnings beat. For short-term traders, I'd watch key support levels around the $140 mark. If it breaks, we could see more downside. Long-term, though, the trend remains bullish if growth holds. Let's dive into intrinsic value to see if the price makes sense. Now let's calculate Palantir's intrinsic value to see if it's over or undervalued. I'm using a discounted cash flow (DCF) model for this, projecting free cash flows over the next 10 years based on historical growth rates and industry trends. Starting with 2025 free cash flow of $2.1 billion, I'm assuming a conservative growth rate of 20% for the first 5 years, given their recent trajectory and government AI spending forecasts. For years 6 to 10, I'll taper that to 10% as growth matures. Using a discount rate of 10%, reflecting the tech sector's risk and Palantir's beta of 1.69, and a terminal growth rate of 3%, I've crunched the numbers. I'm also factoring in their current cash position of $1.42 billion and minimal debt. Let's see the results. After running the DCF, I estimate Palantir's intrinsic value to be around $85 per share compared to the current price of $147.76. That suggests the stock is overvalued by about 74%, which aligns with the high PE and PS ratios we discussed. However, if they exceed my growth assumptions, say by capitalizing more on commercial AI adoption or securing larger government contracts, the value could rise closer to $110 to $120. For now, though, the data points to caution for value investors. Let's wrap this up with my final thoughts.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.